The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN. Thanks for joining me at 9 a.m. Eastern Time Thursday morning. We got market action trending to the negative. S&Ps right now trading down 28 session. You're trading at 39.35. We're at a critical level across the board right now. You're coming right to where we were prior to the Fed statement, 2 p.m. yesterday. Press conference, 2:30. The market trends all the way from about 39.30 to 39.78 overnight. We've pulled back that entire move, basically 39.35 right now in the S&Ps. Tech stocks giving it back as well. We're going to jump to notes and bonds to begin things. As I just talked about on the update, quite the acceleration continues right now. We got a 10-year yield right near 1.75%. You see the action we had even yesterday, getting a little bit of a reprieve. Early in the day, we were making lower price, higher yield numbers. You actually trade to higher price during the day. You rise up to 132.08, basically right towards the end of the press conference. Talk about interesting timing, to say the least. And since then, it's been a one-way ship to lower price, higher yield. We've traded down a full point right now in the 10-year over that period of time, 131.07. So we bring that up back to the tech stocks, as has been the trend. We're dealing with rising yields, hitting some of the growth stocks. We're seeing a pullback in some of these equities, just like we saw the run-up yesterday afternoon. Again, right back to this critical level. We got 23 minutes to go until the opening bell. Whether the market's able to find a bid on that opening bell or this is an indication of things to come on the opening bell, we're about to find out. But that's quite a move, folks. You're talking about 300 points in the NASDAQ 100. The Dow was positive, made it over 33,000 overnight. You got the Dow trading right now down 20 points. You got the Russell off 18 points at 23.16. Nothing was immune to this pullback. Check out crude's acceleration. We're down now more than a full $1.50 just from where we were in the last 2 hours, from 64.80, 63.30, and dropping pretty fast in crude. Gold contract made it up to 17.54. Gold, again, right at the same level that we were at prior to yesterday. Just erased that action all the way from 2 p.m. yesterday to 9 a.m. this morning, as we've given it all back, and we'll pull up the VIX. VIX. Pretty tame action in the VIX, considering a little bit of a sell-off. Remarkable, we got an 18 handle last night after the closing bell, as markets basically were records across the board, right? We got a 33,000 print in the Dow futures. We were within a stone's throw of 4,000 on the S&P futures. NASDAQ 100 was back at about 13,250, and you had the VIX at 1895. Just like that, we're back over 20. And putting the S&P on a daily, you can see the acceleration. Even today's action down basically a full percent from the highs that we were sitting basically at all-time highs. The VIX sitting at about 20. All right, let's get into that jobs number a little bit. So it's really not important what the jobs number is doing to the market. Of course, it's important for society on a whole. People, we want them employed, back to business. But the market is probably much more concerned with the numbers that we're going to see in the next 2 to 3 months than we are the numbers that we're seeing from February or the prior week. So you get into the number, otherwise, and we also have the stimulus that's going to start being effective in the numbers to come, not necessarily these numbers that are out in the week ended March 13th. Nobody had gotten their checks at that point. Actions come same week at as the 1.9 trillion stimulus measure. So none of that cash had been released, though. And so the expectations are all going to be about when the stimulus is supposed to be effective, when COVID is supposed to have turned the corner and vaccinations are reaching, hopefully, some type of herd immunity levels over the next 2 to 3 months. Then what are these numbers going to show? Because if you start showing still 770,000 on a weekly basis filing an initial jobless claim, watch out, folks, in that market. Initial claims in regular state benefits, state programs, rose by 45,000 to 770,000. The Labor Department data showed Thursday. On an unadjusted basis, the claims rose by 24,000 to 746. Not sure how they exactly adjust that. Median estimate was looking for about 700,000. Continuing claims, somewhat skewed continuing claims, as people are forced off unemployment benefits on the state level. When they exhaust those benefits, they are then pushed towards some type of one of the stimulus packages. Ordinary times, that would be it, right? They would be out of state unemployment benefits, and it would be time to get back to work, or you'd be making $0. During the pandemic, you have federal assistance programs that have been passed. You roll on to those. Now that number, which is a more delayed number, claims in all federal programs declined in the week ended February 27th. The total number of claims in all unemployment, 18.22 million. So we're only 10 million people under non-farm payroll numbers, right? Versus a year ago, you're talking about 143 million on the payrolls. 153 million was the week prior, the year prior. 153 million before we came into COVID. Meanwhile, we have 18.22 million people that are on some type of federal program. You're probably seeing people, whether they had to cut time, less time. I mean, we have people, many times people had to be either forced out of work, or you have kids at home. Maybe you have to take some time off that you normally wouldn't have, whatever the be, making less potentially than you were the year prior, even as you may be employed in that number. Let's see. So meantime, you get the Federal Reserve Bank of Philadelphia said its gauge of manufacturing in the region jumped to the highest level since April 1973. Good number, indicating additional strength among factories. The report on Thursday also showed more signs of inflation pressure as a measure of prices paid advanced to the highest in more than 4 decades. I mean, these numbers all keep lining up, folks. You're seeing manufacturing ramp up. You're seeing inflation ramp up. You're seeing the 10-year yield continue to basically gun for the 2% yield number. Every day we've woken up, folks, taking a look at the 10-year. And you talk about an acceleration, right? I mean, things looked dramatic when we were at, even if you go to just the end of September, we're sitting at 140-ish. And you're talking about a one-way trip with very few reprieves. November 4th was one of them. Of course, election volatility there. Outside of that, right? Basically a one-way trip. And today's bar, one of the biggest bars there, following the Fed statement. Okay, jumping back to what else we have going on. Let's see. We'll start off, Bank of England. So this was out there this morning, hitting markets as well. Keeps policy unchanged, follows Fed with dovish tone. Shouldn't be too surprising. The central bank's Monetary Policy Committee voted unanimously to keep its main lending rate at 0.1%. I mean, that's to be assured was not in doubt at all. It comes as bond yields, of course, around the world have moved higher. The committee does not intend to tighten monetary policy, at least until there is clear evidence that significant progress is being made in eliminating spare capacity and achieving the 2% inflation target sustainably. There's a lot of jobs left to make up, folks. I keep going over it because the 143 million versus the 153 million. If you're trying to figure out what Chairman Powell is going to be doing, keep your eye on those numbers, because those are the numbers he's concerned with. He wants employment. He knows there's people out there who are unemployed, out of the workforce. Those numbers don't lie. We had 153 million prior to COVID. We have 143 million now. There's going to probably be some people who go out of the workforce and make the option not to come back. They have the luxury, whatever it is. Maybe they were close to retirement anyway. But you better see those numbers come close, and that's what I'd keep my eye on, because if we get some big numbers in a rise over the next 3, 4, 5 months, there's going to be some expectations on rising yields, as you're seeing in the market. Stay tuned, folks. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We got markets in negative territory. S&Ps right now down about 30 points on the session. We're right back to where we were prior to the 2 p.m. Fed statement yesterday, press conference. We trade all the way up to 39.78. We've given up now 45 points approximately in those S&Ps from the overnight highs. Critical levels, we get the NASDAQ 100 down about 230 points. Same deal, right to where we were prior to yesterday's run. And we got yields above that level. Talk about an acceleration from yesterday's high at 132.09. We're about to potentially get a 130 handle at 131.04 in the 10-year. Let's jump over to our man Kevin Hinks. Folks, right after this program, every day, Fast Market, Kevin Hinks, Alex Coffey, the team at TD Ameritrade Network, talking about hypothetical trades, breaking down the market, talking earnings, of course, when we got earnings going on. Kevin Hinks, good morning.
Good morning, Tommy. Yeah, we're digesting a lot of information this morning. Higher yields are certainly affecting the NASDAQ and certainly helping the financials and some of the industrials. So it looks like more, at least to start the day, it looks like more rotation out of NASDAQ and into other names. But you made a good point. This market, in terms of the E-minis, in terms of the benchmark, is just really rallying or selling off back down to the lows yesterday before it made a pretty strong move to the upside. So, I was just talking to Oliver Rennick, and I told him, this is the day that this market is struggling and becoming bumpy with this change in leadership that we're going through right now, away from the NASDAQ and towards more traditional names like financials and industrials and things like that. So this is going to be a heavyweight battle played out here. But I thought yesterday's price action, I thought Jerome Powell basically threaded the needle with what he said yesterday. He talked about an improving market without talking about raising rates. So, his asset purchases are still going to be there. There's been no drop-off in that. There's been no improvement in inflation. So this will be an interesting market, but it's certainly opening on the downside to start the day here, Tommy.
And like you've talked about a couple times, Kevin, whether we just go back the last couple of weeks or the pullbacks, I mean, we have such large movements in the market across the board. I mean, all things considered, I put the S&P, as you say, the benchmark on a daily chart, man, and this thing just has strength everywhere. And we're basically sitting, at all-time highs within, the span of like 10 hours of actually being at all-time highs last night in the futures. Earnings season, always great. You guys have some great discussions yesterday. I know you're talking about Five Below. I was watching that action. I know we got two coming up today with Fedex and Nike that kind of round things out. Are you going to be talking about them at all on the program? What do we got coming up at 11 o'clock
exactly
today?
Right.
Nice.
Those are the two that we'll be focusing on today is Fedex and Nike. We always talk about Nike gives us that warning that we're near the end of earnings season. And so as we get to the third week in March, we've got about another, just a couple good more names to go. But, yeah, we're getting late in earnings season for sure. But two really good ones today in Fedex and Nike.
And I'm going to jump over the Analyze tab. So Nike trading at about $145. They got about a $6 move in there. So about a 4% move priced in. Not that large. FedEx a little larger, $265 stock, and they're pushing almost $15. Kevin, of course, FedEx, quite the run early from $90 I got on my chart, the high of 305. We've consolidated since about September. Some volatility there, I'm sure, as they come in. We'll look forward to kind of what trades you guys set up, man. We always appreciate the breakdown, and we look forward to the program at 11 o'clock, man.
All right, Tommy. Thanks for having me on, as always.
Thanks, as always, Kevin. Take care, man. All right, folks, jumping back into where we were in terms of commodities. Crude right now, taking a look. I mean, this run in crude, we had Teddy Kegstad on yesterday at about 10:40 in the morning. We're talking about, he had talked about earlier the strength in crude, tying it to some of the currency pairs. If you didn't check out the interview, folks, yesterday, folks, you can go over to our YouTube page. You can find everything we do. It's available on the archives page at TFNN.com as well, but I encourage you to find us on YouTube. Just search TFNN. You can subscribe for free. All the archives we do are over there for every program we do as well. Just a great discussion tying in some of the oil markets with some of the Forex markets that Teddy takes a look at so much. Okay, let's jump back into some of the moves that we had. And I wanted to talk about Five Below even, speaking of. So Five Below, strong numbers last night. Five Below, I mean, check out this run it's had, right? From 47 to 201, retailer. I believe it's like younger age, whether it's even geared towards younger women. Specialty retailer, range of merchandise, teen and preteen customer. Assortment of products, including select brands, licensed merchants. Let's see, including style, room, sports, tech, create, party, candy, and now. Okay. Right up there in their all-time highs. They pop decently higher. It's tough sometimes in some of these markets when you have earnings. And we had a trade in this in my newsletter, just to put that out there, that you get quite a run up, right? Now, right now, we have a bid ask of 202 by 203. We have the market weighing down negatively, of course, on this equity, like it is all equities. You spike up to 214. They had strong numbers. They did in a big way. They beat on earnings. They beat on revenue. They beat on guidance going forward, which is the biggest thing to do of all. They trade up to 214. You have an ask now at 203.75. But we'll keep our eye on it in the open in 4.5 minutes from right now and see how that trades. You also had Dollar General. Talk about some acceleration. You go from 187.50 down to 177 last night on their earnings. And let's jump around to some of the other stocks that I had making moves. There was one more. Yes, Signet maybe was down because this, speaking of retailers, right? No, they're up as well. We had one tanking. Williams-Sonoma, that's what I wanted to take a look at. So they have earnings of $3.95 a share. The estimate is $3.39. You want to talk about, being in the right sector in terms of high-end home retail. Housewares retailer revenue beat estimates as well. Now, this is just, the last quarter. So these trends are not dying at all. We're going to open back up. They will wane for a bit. But the company announced an 11% dividend hike and $1 billion share repurchase program. And, of course, check out that pop, folks. From $135, you're up more than $22. You're up almost 15% coming into the open. And you put this thing on a daily, you're going to be pushing above all-time highs now on Williams-Sonoma. Talk about from 26 to above that level. That reminds me almost of a company, Restoration Hardware. Similar action here in terms of high-end retail at home. Putting this on the weekly to get the full run. You go from 250 prior to COVID, from 73 at the lows. We're hovering near $500 on that stock for Restoration Hardware. All right, we got 4 minutes to go until the opening bell. Pulling up the S&Ps. Really interesting to come into that opening bell sitting exactly as we were yesterday. Do we charge higher? Where do we go? We got tech stocks down big, 214 points in the NASDAQ 100. Take a look at some of the FANG stocks as we come into the last break. Amazon, huge moves. Yesterday, you trade up more than $100 from pre-market to the highs. We've now given up about, $73 from just where we were 3 p.m. yesterday. Apple had quite a run yesterday, up to almost 126. We're back to 123. Microsoft shares right now back to 233 from almost 239 yesterday. And let's check out the VIX as we come into the open 2028. All right, folks, stay tuned. We'll be right back in 3 minutes.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. As the market's open, checking out the S&Ps, a little bit of a rise right now. We're trading at 39.37. The S&P's down about 26 points. We'll jump back and check in as we see how the market opens. Jumping back to some of the tech stocks. So a couple stories out here on Amazon. And I have some Amazon for full disclosure there. They're going to present for the first time at New Friends, a major digital advertising event. Just speaking to how broad their reach is going to be. Amazon will join companies like Google's YouTube, Twitter, and Snap as they present to advertisers at the Interactive Advertising Bureau's New Friends. The Spring New Friends are digital media's take on traditional TV upfronts when advertisers have traditionally committed a large amount of their yearly TV spending. So Amazon had been scheduled to make its debut in 2020. Didn't participate after the events were delayed, pushed back online because of COVID. Nonetheless, they're there this year. They're going to be a huge player. Of course, they are in advertising when we purchase so many products on their platform. Now, this one out yesterday ties in well. Amazon unseats Walmart to become the #1 apparel retailer in the U.S., Wells Fargo said. So they take that seat from Walmart. The dominance in the space was cemented by the coronavirus pandemic, as they put it. Now, the numbers... Wells Fargo estimates that Amazon's apparel and footwear sales in the U.S. grew by roughly 15% in 2020. That's a staggering number when you look at the billions they're playing with, to more than $41 billion, which is 20 to 25% above Walmart. That's staggering. This represents a highly impressive 11 to 12% share of all apparel sold in the U.S. All of it, not online. Like almost 1/8 of every piece of apparel, dollar-wise, sold in the country is sold on Amazon, and about 1/3 of it is sold online on Amazon, of all online apparel sales. Wells Fargo analyst wrote, we now estimate Amazon will surpass $45 billion in 2021. Of course, you're going to have advertising opportunities when $1 out of $8 that's spent on all apparel in the whole country is spent on your website. Think about that. And we're not even talking about online. That's encompassing every single dollar that's spent in every single store on apparel. $1 out of $8 is spent on Amazon.com for apparel. They're going to be ramping up their advertising. You pull up a chart of Amazon. I mean, I was talking about it with Amazon and some of the other stocks. I mean, we've got to pull back again. At some of these lows, Amazon under $3,000 on the long term, you know, we've had quite a consolidation here. We're basically back to early July prices. You put this thing on a 5-year weekly and, you know, it looks like we could consolidate for sure. But at some point, folks, they are just a juggernaut in terms of where they are and how ingrained they are in so many different factors. Excuse me. Okay, let's jump to other stories in terms of stocks making moves here, going down some of the equities that are moving. So we talked about Dollar General, Signet. They're up 5.7%. The jewelry retailer, $4.15 a share versus $3.54. Revenue above estimates as well. Really interesting, all these retailers doing so well when we're not quite out of where we're supposed to be yet. Accenture, the consulting firm, they beat with a profit of $2.23. The market was looking for $1.90. Revenue tops as well. Probably a good time to be in the consulting business as businesses are trying to ramp up, change what they're doing, get into the online method of doing everything. They also raised their forecast. More companies utilize its services, there you go, to move to cloud-based operations, right? You bring in these brilliant people at some of the consulting firms. They work with your company at a hefty price to get you in gear. Nonetheless, you get Accenture. I mean, look at this run. You put it on a daily. We were at about 213 coming into COVID. We spiked down to 140, and you're back to basically all-time highs, 267. You're up about 1.5% today. Look at that give back on the open. Let's check back in on Five Below. Look at that give back. Always interesting how these stocks behave. Now, yeah, they're up 2.5% today. Folks, these were strong numbers on Five Below. We had a bearish bias trade using options, a double leg trade, in my newsletter. We'll see how it plays out. We're hoping to almost break even here because it was bearish, but there was a lot of volatility priced into this equity on the move last night. And let's just pull up some of these stories real quick because I wanted to show, I mean, how they beat across the board. The biggest beat, I thought, was how they beat in terms of their guidance for the next year in terms of fiscal. Yeah, so guidance for the first quarter earnings to be at least 56 cents a share, and for net sales to be 540. The retailer expects earnings between 56 and 68 cents a share. I think the Wall Street was only looking for 40. They expect earnings of 38 million. Yeah, here we go. Five Below said that based on opening about 60 new locations, it expects net sales between 540 and 560 million. Analysts were looking for 442. That's an amazing beat for that company going into earnings, combined with the fact that they beat on earnings and revenue coming into that event, and you're barely up a couple percent. The reason why we went into this trade with a little bit of bearish bias, folks, so many of these equities, you better believe there's some grand optimism priced into the equity when it's trading at almost all-time highs. It is today on some big numbers. But putting this thing back to even a 3-year weekly, you were down to $50. You're 4 times the price we were at the lows. You're almost double the price we were prior to COVID. Many times they are looking for some fantastic numbers, and they delivered. That is some strong numbers and some strong growth, well above expectations. But you see the type of pullback you get in some of these equities where you're priced so high coming into it, and expectations, I keep bringing it up, it's going to be a similar scenario. When you see the expectations for some of these jobs numbers, some of these economic growth numbers, some of the non-farm payroll numbers in the next 2 to 3 to 6 months, there's going to be some grand expectations, and volatility might be here for a bit if those numbers don't live up to the projections that we're getting right now. We got to make up 10 million jobs. We got to make them up kind of soon. You know, it might take us a couple years, but if you don't see some rapid movement early on, the market may be a little worried that it may take longer than we think to put those people back on the rolls, to turn the key. Hopefully the stimulus really gives it a boost that they're anticipating it will, and we're going to find out. All right, let's check back in on some of the FANG stocks as we open. You get the NASDAQ 100 off about 182, and looks like we're getting a little bit of a bid on the open there. It's going to be a critical area, opening right where we were yesterday at 2 o'clock. S&Ps now up about 10 points from the lows we had there. Still pretty negative action, but you see a little bit of a pop right off those levels, 12,950 in the NASDAQ 100. All right, jumping around to other stocks. So Apple, I had this story up here. Let's talk about Apple for a second. They are reportedly preparing high-end iPads that could launch as soon as April. Apple, this story out yesterday, they were trading higher just with the market to about 126. Apple not getting really a boost on the open, 122.59. Just for curiosity, seeing where we are on the entire run, coming right back to a 618. That's where we made it yesterday. You go from the low we had last Friday, the highs we had on Tuesday, you give back 618. We're right at that level, 122.30 in Apple. We go below there, 119.16, probably the next stop on that stock for Apple. All right, let's check out some of the commodities since the open. We got crude continuing to plummet, now with the 62 handle. Watch out below that market. Gold dropping as well, 17.1990 right now in the gold contract. We'll pull up some of the Forex pairs when we get back from the breaks, folks. Give us a call, 877-927-6648. Stay tuned, folks. We'll be coming back right after the break. We got the S&Ps right now down 20 points. We get the Dow back in positive territory. A little bit of a pop on the open to the tune of about 100 points in the Dow, 32,938 in the Dow. We're sitting about 58 points away from 4,000 in the S&P futures. Stay tuned, folks. I'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, welcome back, folks. I think we got a caller on the line. I think we got my dad on the line. Hey, good morning.
Tom O'Brien, what's happening?
What's happening, man? Good morning. What do we got going on?
Well, I'm listening to the program, and the deviance in this market is something else. I mean, because that NDX 100. Okay, so the NDX, my take is that we're still on an ABC structure on the way up. It basically it rejected lower price yesterday. Today you tested the lows. So this is going to get really intriguing watching how this whole thing shakes out, because I know we get the NQs down 202, and it seems like, okay, it's the end of the world, but my take is that it's not the end of the world out here, man. The note and bond market, no doubt, that's breaking lows. And we don't have the volume on the break, but the bottom line price is below it in a big way. So we'll see how this shakes out. But, 203 on the NQs we'll find out whether it's going to be a big deal or not. But I think people should just basically take a look at how this is testing those lows there, and the deviance in those NQs are going to be pretty wild, man.
Nice.
I just heard you talking about Amazon. That's quite a number on Amazon, man, with overtaking Walmart.
It sure is. It's $1 out of $8 that's spent on every piece of apparel that every American buys in every store, physically and online. $1 out of $8 goes through Amazon. That's a lot of dollars, man, of people buying apparel for sure. And then you combine that with the potential, right, in terms of how they charge advertisers, charge retailers to get on there, right, or whatever they do. The opportunities are almost endless. Just back to the market, I agree in terms of the volatility, man. Nobody should be thinking it's the end of the world when you're just back to where you were like early yesterday, right? I just think the moves, I said to Kevin,
right,
we're down on the S&Ps, but we're just, you put the S&Ps on a daily chart, and everybody would say, this is amazing. We've been sitting near all-time highs since forever, it feels like,
No, there's no doubt. There's no doubt. And, when we're talking the option at 11 o'clock, folks, okay, if you haven't tuned into that program and you're into the option market, you definitely want to listen, because they had Kevin had a trade on. I was going to call a little bit earlier, and this, I forget what the symbol was, but the bottom line is that he had a calendar trade on yesterday, the day before. And what was so intriguing about it is that he was totally wrong on the direction, like in a huge way. But because of the volatility inside of the market on the calendar trade, they ended up making money, which is just a total mind blower. And that's where these strategies are so important if, in fact, you are in the option market. I mean, it's pretty amazing how options actually work. You can be wrong, but yet still not lose money. That case there was pretty amazing, man, because they were wrong in a huge way, not in a small way. But guess what? Because that overnight action and the implied volatility inside of the equity, bottom line is that they end up making a few bucks. Crazy.
I mean, Five Below is crazy. I know. I think they had a trade on this as well, maybe potentially selling volatility in both directions. You're within 70 cents of where you were yesterday after trading up almost $20 last night, man, on that equity up to 214. As some of the moves, even you look at it, right? Maybe if you're in this equity and you have the ability to trade it after hours, do you stay in it if you're making a trade and it pops to 215 from 195 on some really strong numbers? Maybe it might be best to exit out of that position overnight and not risk where it goes tomorrow, whether it's 240, 250. We've seen some huge moves, some of these equities when they beat, but no, we're actually almost like negative as I speak on those. So it is cool, man. And Nike and FedEx. So FedEx has, speaking of, right, Nike has a good move, but I'm going to jump over. FedEx got almost a $16 move on a $265 stock, right? So even to speak to some of what you're speaking to right now, I mean, you pull up the March expiration one. So, that's a one-day move, right? $15.48 right now. But realistically, you could look at the implied volatility of the options to expire tomorrow, because that's what they're paying you for 2 days, which would be $16.25 right now. And I mean, you just simply by selling, an at the money put or call, you have almost $7 to $8 of movement before you break even in that equity, which is a great point, right? It could move against you on the simplest trade out there, as in either you buy or you just sell a put or a call, and you have like $6, $7 of movement before you start getting exposure, which is huge on a company like FedEx. But they have some volatile times. What's going to happen to packages? Are they going to grow at the rate they did in 2020, right? Is that going to wane when we're not doing as much online? I'm sure that's some of the speculation, which is why you have some volatility when this stock, they just flew out of the gate from $90 to $305 early, and we've been consolidating like some of the other big dogs for a while. And then Nike. So Nike has some type of a move in there in terms of their analyzed tab. You have $7, so just under 5% on Nike for their numbers. Yeah.
And that Williams-Sonoma was a big number, man. That's intriguing, right? The aspect that this isn't stopping, meaning the stay-at-home crowd as to what we're all doing and what we're all thinking about our houses, I guess, right?
Yeah. It's the last 3 months, man. If it's surprising a little bit to see just they're continuing to beat across the board, man. They're continuing to beat with people just even in the last 3 months continuing to upgrade their home, whether it's their home, their second home. And it's probably a trend that's going to continue. It might wane a little bit, right, for like 6 months, a year. But after that, who doesn't like the ability, at least in some capacity, probably to spend more time at home? Whether it's not working, you're working from home, you make sure you got a nice backyard. If you're working from home even a couple days a week, it makes sense. It does. And in
the picture with Williams-Sonoma, so you have those $1,400 checks that probably were in the accounts yesterday because the major banks are doing it yesterday. And then we know that all those little gadgets, we all like those gadgets, right? They're overpriced, but the bottom line is I can picture people, you get a $1,400 check and say, hey, I want one of those little gadgets. And guess what? A gadget is $50 to $100 at Williams-Sonoma. But the bottom line is that I can see that continuing.
And in a lot of cases, too, 1,400 keeps getting thrown out. But people have to remember, in so many cases, whether it's just one single parent with one child, you're talking about it could be 2,800, right? Whether it's a family of four, you're talking about almost $5,600, man, for a family of four, which is just a mind-blowing number when you think about the possibility of pushing that out to the economy. Yeah.
Yeah, there's no doubt about it. No doubt about it.
I mean, it makes me think, and I mentioned it when I talked about it, like Restoration Hardware, especially if you're in the area. Now, the stimulus is going to hit everybody, but that stock really hasn't stopped. You're sitting within $40 of all-time highs at $486. We were at $73 at the low, especially the higher-end retailers, where you can still be fairly well off depending on where you are in the country, right? And as a family, make less than $150,000, and you're fairly well off if you're not living in New York City, Chicago, something like that. And still you're getting stimulus, and right, it's just some of these companies. Well, thanks for calling in, man.
Doubt.
It's great to talk to you on the program.
Sal. Have a great one, man.
I love you.
Okay,
I'll talk to you later. All right, folks, we got the S&Ps back to the lower levels. We're down 31 points at 39.32. Stay tuned. I'll be right back to finish up the program.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps down about 23 points. You see the action early this morning, zooming it in. Why not? For a minute bar so we can see a little bit of a roller coaster. These are 1-minute bars. We make it up to above 39.44, down to 39.32, back on the uptrend to 39.40 right now in the S&Ps. One more article I want to point out. Speaking of trends that may stay with us, Goldman Sachs seeks volunteers for a move to West Palm Beach digs. So you got Goldman Sachs planning to move part of its asset management unit to Florida, gaining momentum. They're discreetly seeking volunteers for the first wave and preparing the office space. You're going to see it, folks. There's no reason why you need to be paying the inordinate amount of rent. So in those certain cities, yes, you're going to see some companies that want to do it. But you're seeing a change. People can do their job remotely. You saw some of these big financial firms crush it this year at a time when you had people working remotely. They were able to do it, get it done. You're going to see more freedom, and you're going to see those types of differing moves, whether it's to West Palm, come on down to Tampa, folks, too. We got no taxes in Florida on this coast, and it's beautiful. We'll finish it up with some Bitcoin. How about it, folks? That's a minute bar, but let's put it on the daily to see the action. We were as high as almost 60,000 again today. There's your 15-minute chart. Sunday night, we're at 61,255. Overnight, we made it to a high in Bitcoin of 59,685. We'll call it basically flat right now in the session at 58,000 on Bitcoin. S&P sitting at 3940. We'll check in on gold. Down at 1720, slightly below the levels we had early yesterday. Crude back above $63, but quite a slide on crude. Could that be the beginning of a little bit of a pullback in that crude market? You put it on a daily, and we're still sitting basically at all-time highs, folks, in that crude market. And let's finish it up with the VIX. As we've seen the market oscillate, we're sitting right at 20 on the dot with the volatility index. All right, folks, stay tuned. We're going to have Basil Chapman coming up next, his Tiger Technicians Hour, live from 10 till 11 a.m. Eastern Time. Kevin Hinks and the team at TD Ameritrade Network at Fast Market at 11. You heard them. They're going to be talking about Nike. They're going to be talking about FedEx after the bell. Then we get our man Larry Pesavento at noon. Steve Rhodes at 1. Dave White at 2. Tom O'Brien live from 3 till 4. Thanks so much for tuning in, folks. Starting your day with me. S&Ps are down 20 points right now. The day is young. We'll see where we go. Thanks so much, folks. Have a great Thursday.
Building wealth trading